Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Thursday, the 6th of February already. Can you believe how time is flying? It's 2025, and we're about 5:30 in the afternoon. I'm watching these markets trade, and that's what they're doing. They're trading around. They're not accelerating dramatically. Exception would be coffee, which has just been nonstop, as you know. It's finally pausing a little bit, but that's been the big exception. It's just been a vertical move in coffee. But other markets, no. You're marking time. It's like watching paint dry now, and the bonds and the notes, they're sitting. That could all change tomorrow when we get the U.S. jobs report. We'll talk about that in a minute. There's been selling pressure coming into the energies. We're seeing that the Trump administration has now put sanctions on tankers and companies servicing those tankers that are carrying Iranian oil to China. So the screws are coming on there. Remember, when this was done to Russia, we saw 65 tankers park themselves outside of China and Russia, and you can look for the same thing. We've done this, been there, played this game with Iran before. The Biden administration unwound it. The Trump administration is pumping it back on. In the currency markets, we saw today the Mexican peso, the government there, cut interest rates 50 basis points and said there's more of that to come. In the Bank of England, they cut their interest rate by 25 basis points, and they imply that there's more to come there. The dollar was just plain stable. That's the only word I could use for it. Metal markets broke back a little bit today, and you can look at my metal report to see what's going on there. Now, in terms of the news for tomorrow, you're going to get the non-farm payroll data coming out at 7:30. I'll share with you that they're looking for 170,000 new jobs and unemployment to stay at 4.1%, which is full employment by any stretch if it comes out like that. December hotel inventories and sales data, that comes out at 9. Now, on all these reports, by the way, in my written update at night, I give you the estimates and everything coming out, what the trade is looking for. I don't do that here by design. People pay me to do these things, so I just give you what the headlines are here. This is free. University of Michigan preliminary February consumer sentiment indices will come out Friday, and that's at 9 o'clock. This will be your first look at that. And the Federal Reserve will release their December U.S. consumer credit numbers at 2 in the afternoon. But the big event's going to be the farm payrolls. That'll be what moves the market one way or the other. We saw after the market today, Amazon come out, and like some of the others, like Meta, people were saying, well, how much are they going to spend on AI? The market was originally thinking 80 billion. They blew right past that for this year coming up. So you're going to see certain companies want to spend a lot of money. They want to be the company with AI, and that's where you're at. When you look at the and by the way, Amazon's down on that about 3% in the aftermarket. In the S&P, the mini weekly, you can see how the market just marking time. So this is one of the reasons I'm putting these out early. I see what's going on. We've gone into a stall. Do you deny that? I mean, if you do, if there's something you're saying I'm not, doesn't mean you can't come out of it, but you haven't. So now we're just sort of hanging in here. The overall pattern is bearish on this because you have lower highs and lower lows. The market is staying over the 18-day average, which gives you bullish bias. So the two neutralize each other because one's bearish, the other bullish, and there isn't very much to do when you have that. When you take a look at where the market could see resistance, it's near the 6,200 level, but the longer it just hangs here, what's going to happen is this black number and that black one, it's like their arms are going to wrap and come into the market like that, and that's a sign that volatility might come out of the market. I want to see the reaction, obviously, to the jobs report, but if it's very muted, then I think I'm onto something for you. In the slow stochastics, you've corrected. It's past tense. An overbought condition. Now you're just sort of hanging here? No, you're still overbought. Why? Question, answer period. Anytime you got a reading over 70, that's it. So keep your eye on that. By the way, the more I'm doing this, the more I'm realizing I should do at some point another live webinar. I got to see if I am free this month. This is a rough month for me. I'm taking off 2 times this month. You won't know that here, but I won't be in Chicago a couple of times. Well, actually, once this month, once in March. I want to look at my calendar. I might be able to squeeze one of these in. We've got the market sort of drifting right here. Okay. So then I come to the NASDAQ. The pattern is different, and I showed you this yesterday. You have lower highs but higher lows. So the market's wrapping its arms this way. You're going to come into probably right here, a point where the market's forced to break out one way or the other. The longer it just drifts, the narrower the ranges will get, but tomorrow's a big, important day. When we look at the micro Dow Jones, you have a lower low, a higher high. You're really not trending just yet. If you come down, and let's assume you were to finish just like this, as it is, then you'd suddenly have lower highs and a lower low, but you'd still be over the 18-day average. What about the slow stochastic? You're still embedded until it closes under 79. Not much of a signal there. But if it closes under 79, then I think you'll drop back towards the 18-day average it closes. And in the Russell, I don't see anything here. This market just sort of caught right in this pattern. Resistance is clear at 23.48. You're in the support areas. We'll see what it wants to do. Then we get to the notes and bonds. And the one thing that's been evident is you're staying over the 18-day average, but you're captured here by the upper Bollinger Band. The momentum in the market, you can't count tonight's where the slow stochastics are, but they were at 84 and 83 at the close today, 87, 82 on Tuesday, and both numbers over 80 on Tuesday. So Tuesday, Wednesday, and Thursday, you have your embedded readings. That's bullish, not bearish. So unless the market sees this number close under 79 tomorrow, the odds favor that on pullbacks, maybe off the jobs report, the market's probably going to get bought. I think the pros will throw in the towel if you close under 79, looking for prices back here. And if you can clear the upper Bollinger Band, well, then you're opening up to the 110.22. Think about it. We've gone from 4.8 to roughly 4.4 in 3 weeks. It's crazy how fast it's all happening. In the 2-year notes, just back and forth action. You can see how it's just hanging, supports the 18-day average, resistance to Bollinger Band. Momentum is turned, or in terms of momentum here, turning down, but the bias still is up. I don't see a darn thing. I wish there were something to do there, but I don't see it. Now, if the dollar takes out the lows of Tuesday, let me get this right. Today's Thursday? No, lows of Wednesday. Wednesday's lows, then I think you can get back to the lower Bollinger Band. If you don't, the resistance is 108.13. I was looking for a pullback. I've got it. That's what I was looking for. The question is the market going to hold these lows if they're challenged? That's going to be the big issue. And on the euro, in the short term, the market turned bearish. Now, the key is, can the market stay at 104.03 underneath the 18-day average? You've got lower highs, lower lows. The market just turned bearish. You negate that if you take out Wednesdays. That's Wednesday's high, which was 104.64. Don't take that out. You open the door up again for down here. So there are some things pointing that the dollar could get stronger off of this. The British pound slipped back, almost challenged, as you can see, the 18-day average, and not doing a heck of a lot one way or the other. In Bitcoin, lower highs, lower lows. I've said to you probably every day for a week or so that I think we can get back to the lower Bollinger Band, and this is apparently that move that's going to try to do that. We'll see what happens, all right? But remember, this market was way up here in the 111,000, so you backed off pretty good in the market. Then on the energies, all right, they are oversold and gradually, and I can't use that word strong enough, gradually breaking down. They're into the 200-day average in gray right here, and that's been holding the market literally the whole week. Not so in WTI. They've broken down, and now they're challenging the combination of the 100-day average in here. Some of the big brokerage firms, I'm talking the big bank firms, came out today, and they're starting to predict $60 WTI crude. So that's interesting too. Are we getting an embedded reading? Embedded is so important because people think the markets get oversold. They're actually adding to the bearish momentum. Both numbers under 20, both under 20 on Wednesday, both under 20 the day before. So you're well embedded, which tells me that if you get bounces, the trade's probably taking a look, what does it do against this 200-day average? Remember, what was support, if you get through it, becomes resistance on the way up, but you seem to be caught between the 100-day average and the 200. See that right in there? In a market that's got downside momentum. In the heating oil market, the same thing. And Scott Bessent said today, and I loved it when he said, what we need, we being Trump team, they want to see heating oil and gasoline prices down because that's the everyday money that consumers spend with, and that will take inflation down. Well, it's really not the way the Fed measures inflation, though. So I differ with him on that. The Fed has X food and X energy costs when they measure their inflation targets, right? I am on that. Interesting. Very different school of thought that's taking place there. And I love the fact that what the Treasury Secretary said is he will not do any bashing of the Federal Reserve. Do not look for him to be negative or positive. Neither is going to happen. He's going to stay in the neutral camp. That's what the U.S. Treasury Secretary should do. I appreciated that. That is what the Treasury Secretary should do. He doesn't have to work with the Fed, but what he does and what the Fed does, it's all intertwined. You do understand that. It's very important. Lower highs, lower lows coming down to the 235 area, very possible. You're oversold. Nat gas has had this neat little rally back up into an area that if it's going to fail, this is where it'll happen, right against that 18-day average. So you corrected an oversold condition. I would not tell you to buy it with stops 20 cents lower. No, that's way too much money to risk. So I don't see much of anything other than the market's no longer in that bear move, but we knew that 5 days ago. We were talking about that here. And one of the things that I've been watching is what's going on right now in the pivot points. And the reason is how many of these markets are just drifting along. And when you get drifting markets, traders, especially day traders, come out of the woodwork. And what they like to do is hit the markets one way or the other, looking for market moves. Now, the pivot point is based on a prior day's open, high, low, close. You have a certain formula. In the formula, you start dividing the market into quadrants. That's what the formula does. So the pivot is the white number. The sell zones are sell 1, sell 2, and under the market, buy 1, buy 2. And what you're looking for is how to play that. And then I tie momentum into it. Do I use it when I'm looking at markets? What if I tell you every day? So it is a tool that I watch. I am not a day trader for my clients in any manner, but I like to, if I see that there's something there, it's telling me, hey, I've got a buy or a sell signal and it's down at that. Why am I being so conservative sometimes? Make your move. So there's many ways to use it, but if you don't know what it is, you can't use it, right? So we have a free video series that teaches you how to do it. And if you have any type of good charting software, you have pivot points in it. Go to iraepstein.com. The free course is in the free offers. Move your cursor to the top here and you can get it that way as well. I'm Ira. Hope to see you in our Spider ETF review tonight. If not, we'll catch you first thing in the morning. You take care.